right, welcome in. So today I have the fall or the late summer, early fall market update for Columbus, Ohio. We're coming off of what feels like a very busy and a very productive spring and summer season. And we've got a very interesting fall that we're heading into with elections coming up, with the potential of some rate cuts coming. So I wanted to talk to those points a little bit, but before we get into that, let's just take a quick look at the numbers of where we are so far this year. So the first thing I want to point out to you is number of new listings. So new listings peaked in May and they've been on a slight decline since that time. But even more interesting than that is the list price to sales price ratio. So list price to sales price ratio also peaked out in May and has been on the decline since then. But what's interesting is that we peaked here at about 99.9% list price to sales price ratio in May of this year. So we didn't even hit the full 100% as an average, which if you'd gone back to last year and the couple of years prior to that, you would have seen that number be closer to like 102 to 104%. So there is a little bit of a relief in the marketplace as it pertains to the competition that we're seeing. Let's talk absorption rates for a minute. Absorption rates have been on the rise since actually early 2024 in the February-March timeframe. So absorption rates are a measure of how fast inventory is selling through the marketplace. Right now we're at just under 2 months supply of inventory. Anything below 4 months supply of inventory would be considered a seller's market. So we're definitely in a seller's market, no matter how you slice it and dice it, but it is certainly much more advantageous for a buyer today than it was the previous few years. We're at about 28% higher year over year for the month of July for absorption rates. And so it is a little bit better of a climate for buyers to be buying in this marketplace as it pertains to competition in the marketplace. As far as home price appreciation goes, we're averaging about 5.5% throughout 2023. So that's a great sign for the market, steady home price appreciation. The general takeaway here is that the market has softened a little bit and it is a better place for buyers to be buying today than it was, in this time frame last year and the year before. So I think a lot of people have already noted that. Certainly the spring of this year was a very strong market, particularly in certain areas, certain suburbs. We are definitely still seeing extreme demand, but other parts of the city, we're seeing a little bit less demand. Not to say that homes aren't selling, just that they're selling at a more moderate pace and something that's actually healthier for the marketplace. So that's the general assessment of where we are right now in this year. I mentioned a little bit about the potential of rates coming down. I have read a few times recently that we might see some rate cuts towards the back half of the year, starting potentially as early as September. So we'll have to keep an eye on it. Right now, the 30-year fixed rate is in the mid to high sixes, which is good for the market, but maybe if it gets a little bit better. And the thing to speculate here is if we do get rate cuts that drop down to the low sixes or even the high fives, we're talking about probably a surge in buyer demand, no matter what time of the year we're at, because there is still a lot of pent-up buyer demand for those who would like to buy a property but can't because of affordability reasons. And usually in election years, as we approach the election, we do see a slower market because there's a lot of hesitation from consumers. If you have that in conjunction with lower rates, it'll be interesting to see how home buyers are impacted by that and what their drive is to go out in the marketplace and find a home, whether they're motivated by the external economic factors or whether they're motivated by the rate and the opportunity to get a better monthly payment on a property. So that should be interesting to see and something that we will definitely be following closely over the next few months. Hopefully this video helps you guys out. Let me know if you have any questions, and thanks for watching.